Money in Excel, what it can do for us. Get ready because Excel now has a mind, and Excel is going to keep its mind on our money and our money on its mind so that we can keep our mind off our money and our money off our mind at least a little bit more of the time. What is Money in Excel? Money in Excel is a pre-formatted template from Microsoft that has the functionality of allowing us to connect to financial institutions, pull financial data directly from those financial institutions, and populate a pre-set up template with it. Money in Excel will be available to people if you have some kind of subscription model with Microsoft Office. If you've worked with accounting software, many accounting softwares have this kind of capability of connecting directly to a bank account and getting access to the actual transactions from the bank account and using them in some way, shape, or form in the creation of the financial statements. Software such as a Quickbooks or Xero have this kind of functionality. So we have a similar kind of process here in Excel, meaning we're getting data directly from the financial institution. We will do some comparing and contrasting between accounting software that does that kind of comparison, accounting software that uses a full double entry accounting system with it, and then the use of that kind of information with Excel. So there are situations where you might want to, for example, have Excel that's going to be added on or have some features included, and also have QuickBooks for, say, a business type of activity, or there are some instances where you might want to use Excel. It might be a little bit easier to put certain things together that you might need with similar functionality. So we'll do some comparing and contrasting as we go. So what can Money in Excel do for us? Well, we can take the financial data that we're getting from the financial institutions and create something like an income statement. The income statement can be used, for example, possibly for a small business. A small business may need to put together an income statement for tax preparation at the end of the year. If you need to fill out a Schedule C type of business, then you're going to need some type of income statement in order to do so. Oftentimes, we have a situation where we have business and personal information kind of mingled together in the same checking and or credit card accounts. And if we get the financial transactions into Excel, it can help us to kind of weed out that information, to pick up the business information, possibly a starting point then for us to create our taxes for our Schedule C type of business. That's one of the major focuses we'll be concentrating in on here. So create a balance sheet. It can also be used to create a balance sheet. Now it's going to be doing so in a little bit different of a fashion as we would be expecting to see with a QuickBooks type of system, because we're not creating a balance sheet using Excel, using a double entry accounting system, but instead just pulling the ending balances from the financial institutions, which can be quite useful because we can get that information very quickly, and both personal and business information quite quickly. So we can even get the liabilities related to it. We can pull in other types of data that we don't typically see in accounting software, just simply pulled in from the financial institutions, such as like a 401k plan, mortgage information, credit card debt balance type information. We don't do that in accounting software. One, because accounting software is usually going to be focused on the business side of things, possibly not so much on the personal side of things. And two, because accounting software needs to be using the double entry accounting system and using the data in order to create the balance sheet. So that's why this balance sheet can actually be used quite nicely in conjunction with using accounting software, possibly for our larger business needs. And then we have generate a budget. So once we have this information in our system, we can analyze different things, both personal budget and business budget with that information. How does it compare? How does this Money in Excel compare to something like accounting software, something like a QuickBooks, something like a Xero, something like a Wave accounting software? I put these on there because these are some of the more common accounting softwares for small businesses. Larger businesses obviously will use accounting software as well and have similar functionality where you can connect directly to the bank, and then the banking information can be used to help with the construction or verification of financial data and making the financial statements, the balance sheet, and the income statement. So now you have similar functionality to pull that stuff into Excel. So if you're using accounting software, of course, one added feature is typically you got to pay for the accounting software. So obviously if you use QuickBooks or Xero, you'd have to pay for that. If you use Wave, I believe Wave, last time I looked at it, is a free accounting software. It doesn't have as much functionality with the bank feed features for memorizing transactions and that kind of things. It's not quite as sophisticated, but last time I checked, there's a wave accounting software out there where you can actually do the bank feed transactions, and it's free. It's a free software, at least it was last time I took a look at it. So one, cost is going to be a certain factor. If you're using Excel and you already pay for Excel, then you already have access and you already have access to the template. The other kind of restrictions you have with the accounting software is, once again, you're using the double entry accounting system in the accounting software. Therefore, when you pull in information into the accounting software from the bank feeds, even if you're using straight a cash basis method and just pulling data directly from the bank and trying to construct your financial statements just from that banking data, you have to have a little bit understanding about the forms that are going to be used in the accounting software, because those are going to be used to create financial transactions. You're going to have to create both the balance sheet transactions and the income statement transactions, and those will have to be created from basically the financial data that's coming in, the activity that's coming into the system. So the fact that you're using a double entry accounting system and having to break out the balance sheet and income statement can make it actually a little bit more complex here. It's better because that means that you have a double check. The double entry accounting system helps to not make errors, so it would be a better system to use, but it's also a little bit more restrictive. If you have the data in Excel, then you don't have to, you can cut the data down and just trim it down to basically an income statement. If you're looking for just an income statement to be created for like a Schedule C type business, it might be a little bit easier actually to take that data, categorize the data, and then create, in essence, an income statement from it. Also note that if you're using accounting software, you're typically using it for business purposes. It is possible, and we have courses on how to use accounting software and kind of use the same file to track both business and personal information in the same file. But typically the recommendation would be that in a QuickBooks or accounting software, you use that for the business. You separate business from personal. You have a separate checking account for the business if possible. And then you make your financial statement in the accounting software for the business using the double entry accounting system. And then your personal data is going to be basically outside of that. Now, a lot of times, especially if you're just doing new business and you have gig work or something like that, and you now have a Schedule C type of business, your financial information is all mingled together. The same checking account, credit card statements have business and personal. You got to somehow pull the two apart. And you can do that in QuickBooks, but it's a little bit more difficult because you can't just delete the personal data or anything like that typically. What you need to do is record it as a draw on a balance sheet. So you got to have some concept of a balance sheet and an income statement. Or you can use class tracking, which we go over courses on that. So you can actually compare balance sheet and income statement side by side, but that's a little bit more difficult to do. On Excel, we can just assign a class and we can actually trim it down if we want to. We can do like a cruder kind of method to just remove the data to see an income statement. Or we can use pivot tables to actually see either business and personal data a little bit more easily in some cases there. So let's take a look at it. Here's what a Money in Excel template would look like if you basically download the information. You got the Money in Excel template up top. This is the transaction tab. It'll typically start off with a welcome, instructions, snapshot, transactions, and categories tab. We'll go into them in more detail in the future. We would then connect the financial institution, which we can see on the right-hand side. We got our tabs up top, account templates, and the information up here. And then we can pull in our information. These are the transactions from the institution. So these would be the financial transactions. This would be a similar kind of thing here that we would see in the accounting software. The accounting software, like a QuickBooks, would need to pull in the actual transactions that it would then use to create financial statements, balance sheet, and income statement from it. Now here, note that we could have multiple institutions that we pull from. We might have then like a credit card. We might have different bank accounts that we can all pull in together. And it actually puts all of those transactions into one item here that we can then sort. We can sort by date. It pulls in a lot of information. So if you needed all of 2020, then it actually pulls in a whole year of 2020 here, like 2 to 3 years worth of information. So if you're pulling in like a whole year's of information and want to carve out like an income statement from it for taxes, for example, then it pulls out the whole year's of information. We have the merchant information that pulls in. That comes from basically the memo items, and it's not perfect here. It tries to do a merchant calculation as best as possible. We'll talk more about that later. Then we have the category tab. that we would then need to assign the categories. It's pulling over the categories from this category tab over here. This is where the work comes in, that we have to basically go through this categories tab and make sure that we assign them out to what they pull in from the merchant, the vendor. We have a subcategory. This is optional that you can have that would add more detail. And then we've got the amount. We can sort by the amount, of course, if we so choose. We've got the accounts, which could include, once again, multiple accounts, such as checking account, Visa account, and so on and so forth. And we could sort by those different accounts. So if you compare that to, say, like a QuickBooks, this is QuickBooks Online, and you can basically connect to the bank with a QuickBooks Online, and then you pull this information into basically a transaction area, what they call it. I call it like bank feed limbo. This isn't the same data, but you can get, an idea from it. And those transactions would be down here. Now, this would show down here in like a QuickBooks Online, basically per institution. So you'd have it for one checking account, another checking account, and then a different one for your credit cards, and so on and so forth. This information is not now being used to create the end result, that being the financials, which would include a balance sheet and an income statement. So this balance sheet and income statement has stuff in it, but it's not coming from the bank feeds we're just using right now. The bank feeds are not being used to create the financials. Here would be like the income statement. So if I go back to the first tab, this information then is kind of in what I would call bank feed limbo. And then you'd have to go through and basically assign a similar thing as the categories, like we'll see in the Excel worksheet, in order for QuickBooks to then populate it. So you also need to know a little bit more here in terms of the assigning out of the categories, because you got to make sure that you're assigning it using kind of like the functionality, like a bill form or a deposit form, and knowing what a customer is and a vendor is, so that we can use those forms to then populate the worksheets. Then when the actual financials are created, again, you kind of have a little bit of understanding. You need to have a little bit of understanding in order to know what's happening here, because they basically kind of magically appear. Whereas in Excel, if you build it from Excel, you'll be able to more transparently kind of see it, because we'll just copy and paste it with the raw data. So let's see this over in QuickBooks. I'd have to add the data and then include the data in the system, confirm it, and then the system, if I do it correctly, will populate our income statement for us. This is similar for just about any accounting software. I'm not advertising QuickBooks here. You could use Xero as another popular software. You could use QuickBooks Desktop. Wave, this is the one which I believe is a free, last time I checked, a free accounting software. We have a course on that if you want to use it as well. It has a little bit less functionality, but that's another option for you. So then if I go into Excel, then here we have to do a similar process and categorize these items. So we can add our categories over here, which are basically account categories. It's limited to basically expense items here, because we're not going to be creating a balance sheet from this setup. All we're going to do is carve out an income statement. The balance sheet in Excel can still be created in essence, but it's being done from the ending balances from the financial institution. So whatever in your checking account at any given time, it's just going to populate basically a net worth kind of calculation, which we'll talk about how to do in a little bit in a future presentation, which will look something like this, which is basically a balance sheet. This is a really nice tool that it has here, but it's not the double entry accounting system, meaning the financial data that we pulled in is not being used to create the balance sheet. In a QuickBooks system, the financial data that we pull in has to be used to create the balance sheet, because that's what the double entry accounting system does. So this allows us, the fact that they're disconnected means that we don't have that double check that we want in an accounting system, but it does give us that nice snapshot really fast because it's disconnected, and we're just pulling that information right from the financial institution, and we can have multiple institutions included here to pull in things like the mortgage, the credit card debt, and all that kind of stuff into one snapshot that we can adjust periodically quite quickly. So if we go back to then the transactions, we can then use this transactions once we have the categories to basically carve out an income statement. And that's what we'll focus in on for part of the course here. We'll then, copy this information, make basically a financial statement from it. We could just group this information together into an income statement. We could carve out this information a couple different ways. We could do it, a way that's not as nice looking way, by just deleting what we don't need, the personal data. Or we can then take that information and use something like a pivot table here. And the pivot tables allow us, once categorized, to kind of break out this information for both personal information and business information. So if you're looking at a nice just to carve out an income statement, then you can do that. Now, the other thing that's kind of nice in Excel that you can't really do in QuickBooks so much is remember that in QuickBooks, you usually want to break out your business versus the personal. So you usually want to have your business information in QuickBooks and then possibly your personal information in another account. Therefore, one use you might have here is you might have QuickBooks doing your business in a full service accounting system using the invoices and so on, doing a full service accounting, and then use Excel over here to help you to populate your personal information and get your personal financials, possibly including the income statement or simply the net worth calculation, which then can pull in that financial data as like your mortgage and like the credit card data as of a certain point in time and things like your 401k plan and that kind of stuff. If you're just tracking within QuickBooks your business data, you're not going to have all that personal information. And even if you do have that personal information, you're using QuickBooks to track it. The balance sheet, if you're tracking on the balance sheet, for example, like a 401k plan, or something of value like the retirement plans or brokerage accounts or something like that, then you have to adjust them periodically for unrealized gains and losses. You got to take the statement and adjust it here because that's how QuickBooks works. You got to enter the transactions for it to populate the balance sheet. Whereas if you're not using the double entry accounting system and you're just saying here in Excel, I just want you to pull in what the bank says my balance sheet is. I want you to just pull in what the bank says is in my checking account, is in my 401k plan, is in my retirement plan, what my mortgage balance is and whatnot. Then it doesn't need to do any double entry accounting system, and it can just pull in that data and give you that information quickly. Can't really do that so much in the accounting software again, because the accounting software needs to take the transaction data to create the balance sheet and then double check using bank reconciliations that the balance sheet information we have ties out to the financial institutions. So the fact that we can use this in conjunction with QuickBooks, meaning use QuickBooks for the business, possibly if you have the business needs for that, and then use this on the personal, that can be useful. And again, if you have data where you're basically have business and personal in the credit card transactions and the business transactions and the checking account transactions, then you can use QuickBooks to kind of parse that out. You can put this into QuickBooks, for example, and when you go through these transactions, everything that's a personal transaction, you could do one of two things. You can say, I need to assign it to a draw so that it doesn't affect the income statement. But in order to do that, you have to understand, what the difference is between a balance sheet account and an income statement account, and then just realize that when you go to the financial statements, what's going to happen? It's when you post something to a draw and you go to the balance sheet, it's going to be recorded down here in equity, as opposed to if you go to the income statement, it being reported as an expense. So everything that's personal, you would typically record to a draw. So if you pick that up, then you can basically use QuickBooks to break out personal and business, or you can use class tracking. In class tracking, you can assign every transaction to business or personal. And that way you can use one QuickBooks account to have an income statement that'll break out business and personal in two separate columns. That's more tedious to do. We have courses on that, but you can do that as well. But in some way, shape, or form, you're going to have to take the information that's coming in from the bank feeds and feed it into the income statements in some way. Either if it's personal information you're trying to remove, you can't really just delete it. I mean, you kind of can, but that really defeats the purpose. You're not supposed to delete it like that in the accounting system. Whereas because you're using the double entry accounting system. But in over here in Excel, you can kind of do that, right? We can take this data, we can copy this data and say, I just want to carve out an income statement, and we can then use pivot tables here or use some other construction. We'll do multiple constructions to make the income statement or make the data we want from it. And then we can look at, in a separate way, the balance sheet, which is not being made from this data. It's just pulling out over the ending balances that the financial institutions have for the ending balances. So in essence, there's some pros and cons to making like a small income statement for this item. Obviously, if you have a larger business, you want to break out your business information and possibly use the accounting software where you can do a full accounting, like have invoices and track the bills and do a bank reconciliation. All that is something that you want to do for the business. But again, if you have a small gig work job that's a cash basis job and you're trying to carve out that information, it might actually be a little bit easier in Excel. And whichever method you use, then Excel could be complementary to an accounting software, to a business software, because again, you can pull in that ending data from multiple institutions and get a nice snapshot of your ending numbers, where you stand, kind of balance sheet information directly from the financial institutions.